Welcome back. You're watching The Money Show with me, Kavita Thapliyal. Now, among the various categories of hybrid funds, one of the very intelligent fund in terms of allocation logic is the equity savings fund. But what exactly are equity savings hybrid mutual fund, and what kind of investors should be looking to invest in them? Let's answer all of these questions with Aamar Deo Singh, Head Advisory, Angel One Ltd. Aamar, good evening and welcome to the show. Thank you so much for joining in today with all your research on this very important hybrid category, equity savings fund, which have been in vogue for quite some time, especially when we talk about the hybrid category. It's an amazing product because, in fact, I would like to call it a very intelligent product because you have equity, debt, and cash futures in it. But then, in a layman's language, just for the sake of understanding, what kind of a portfolio mix an ideal equity savings fund would have?
Yeah. See, what happens here in this fund is that it more displays or plays out the risk profile of the investor, because that's something which is very important from an investing from a long-term perspective. So when we look at these equity saving hybrid funds, so they have a mix and match of different asset classes. So be it equities, be it bonds, be it gold, be it even holding a certain percentage of cash. So they basically look at allocation from a risk profile perspective. One. Secondly, we also see is that even in equities, you got some. Now, suppose someone wants has a low risk appetite, then for that person, a mix of debt with equity could make sense. So a large cap, again, he wants to take low risk. So large cap stocks could be looked at. So you've got a wide variety of options when you're looking at these funds. So you've got large cap, mid cap, small cap, you've got active funds, you've got passive funds, then you've got this multi-asset allocation which can happen. And the best part is that there is also something called a dynamic allocation which happens. So in some of these funds, wherein based on market conditions, so for example, if interest rates are moving up, then it makes sense to move into debt. So a significant chunk of the portfolio would then constitute debt as compared to equity. So a lot of this sort of intelligent investing comes into play when we are looking at this type of funds. And also what happens is that, for example, if someone is looking at a more, I would say, equity-oriented fund, so it could, the fund allocation towards equity could go up from 65 to 70%. In case the person or the investor isn't that much doesn't have that much of a risk appetite, then that could means come down to as low as 30-35%. More could be in, I would say, a debt instrument. So this would be more conservative hybrid. And the other one was more aggressive hybrid. So you got a lot of options here, and the investors also have that, I would say, confidence, because this, I would say, different type of funds which is available here, it also has a decent track record to look up to.
Clearly, equity component offers growth and also appreciation of capital, Aamar. But then let's talk about the arbitrage part of it, which could be slightly tricky for the investors to understand. It definitely constrains the upside, but then also mitigates your risk. How does that happen?
Yeah, see, generally what happens in arbitrage is more of a price play difference, wherein the risk of a downside is to a very great extent minimized, wherein the upside, as you rightly said, that seems to be capped. So what happens in that case is the returns also, if you look at these arbitrage funds, they are not that great, I would say. But comparatively, some of them do beat the FD interest rates which are offered, but more or less it's more of a way of investing, and more or less it would be more suited for those who are having a fund of funds. So they are looking at, say, for example, aggressive hybrid funds, and they could also be looking at some part investing in, I would say, arbitrage funds. So where the returns would be in, I would say, more or less in single digits. But again, that gives you an opportunity to diversify in case of extreme market conditions.
So, in a product like an equity savings fund, Aamar, there are at least 3 asset classes through which you get the benefit of diversification, or there can be more?
Yeah, I would say there can be more as well. So it could be, suppose someone looks at See, hybrid here, what happens is that the percentages keep on changing. So you can change the percentages based on market conditions, which I said was dynamic allocation, which is possible in hybrid. Other way you can look at is balanced, wherein you are investing an X percentage in different asset classes. So it could be, for example, equities, then it could be bonds, it could be gold, because gold also being part of a portfolio makes a lot of sense if you look at the current returns which gold has generated. So it definitely helps having assets which are to a great extent, they are not means too much the positive correlation. So that way there is the diversification option also there. And also I would say that gives the opportunity to look at different asset classes. So what we find is that when the equities are not performing, we find that the debt funds are performing, we find that gold is also performing. So likewise, but what happens is when the equity starts performing and you don't have the bond markets or the debt instruments or gold not performing, so there is where the dynamic asset allocation happens. So that opportunity is also available in such type of hybrid funds. So one should look at that as well. And some, I would say, funds also look at holding in, I would say, cash to a certain extent in case they want to just wait it out. So that option is there. But primarily, I would say it's more of the equities, bonds, a different type of debt instruments, and bullion as well.
What are the top performing equity savings funds?
Yeah, amongst that, if you look at these top performing funds, I would say ICICI Prudential Equity Debt Fund that has generated annualized returns of over 28%. If you look at the last CAGR of the last 3 years, so that fund has been quite quite a good performer, and it has been aggressive on the I would say the equity side, but they are also have a significant chunk in the debt. Other equally good performing funds, I would say, during the same period, in the one is the HDFC Balance Advantage Fund that also has generated a annualized return of around 27%, and Kotak Equity Hybrid Fund that also has generated 25% annualized return. So these are some of the funds which have, if you look at them, so they have performed reasonably well in this category.
Heavy on the equity side. I mean, they have an exposure towards equity more.
Yeah, but they also have a chunk invested in the debt as well.
What about multi-asset allocation fund if I want to compare them with these funds?
I would say multi-asset allocation funds, their returns would vary, and that is more of an active play. So there the returns would vary, because if some of the multi-asset funds have invested in gold for that matter, then they would outperform in that case. Otherwise, I would say the performance in these funds are comparatively better.
What kind of an active strategy you think a fund manager needs to adopt when we talk about the current market scenario, and considering that we have the benefit of equity and debt in this particular fund, it will definitely provide some kind of a relief for a conservative investor if there is more of a debt component in it. But then, do you think the fund manager has the flexibility of reducing or increasing either of the asset classes in the fund?
Yeah, see, generally what happens is that it's all market cycles which come in play. And if you look at the current trend of rising interest rates and also inflation catching up, so now we are seeing some sort of peaking out. But still, it's early to say that interest rates have peaked out, because still we have some way to go, at least a couple of quarters till we can confidently say that interest rates have peaked out in the US. That's one. So clearly shows that fund managers who are looking at actively managing their portfolio, because on one side you can have a pure equity portfolio, the other side you can have a mix of different asset classes, multi-asset class, including a component of gold. So there the opportunity lies greater in terms of managing, because there are two things one needs to remember. One is returns. We talk about returns, but we also need to understand what is the underlying risk, what is the sort of risk or the drawdown or that the funds are actually displaying over a period of time. So there the multi-asset funds would anytime outperform, and anytime they would perform better. So that's an option one should definitely look out. But that would be, I would say, a lookout of the fund manager as to when the switching happens, or in terms of what is the percentage one would look at investing in equities or bonds, or for that matter, gold. But having a healthy mix of these three, definitely, I would say from a long-term perspective, one gains, because one also needs to remember that when there are major up moves, we also see some major corrections. So if there a diversified portfolio helps you in minimizing the downside, that itself is a big plus. So their multi-asset allocation definitely helps.
So, Amar, the kind of funds that you just mentioned, those are the categories that you mentioned. Now, specifically talking about the equity savings fund, I can see a long list of equity savings fund that are launched by AMCs. You know, you've got a Sundaram Equity Savings, you've got Axis Equity Saving Fund, Edelweiss Equity Saving, SBI, ICICI, HDFC. What is different in these funds than the one you just mentioned?
Yeah,
Because the earlier
so
what
what
you mentioned was category. I'm talking specifically about these funds and the kind of return, minimum 3 years return, what has been the performance of these equity savings fund.
So generally what happens here is that if you look at this equity savings fund, they are more attuned towards equities. Now, again, what happens is that there you have three classes there, meaning you have the large cap, you have the mid cap and the small cap. So large cap is more for those who are looking at decent returns. So the returns anywhere could vary between 12, 14, 15% sort of returns because large caps anyways, they are big sized companies. Then you got the mid caps and the small caps. I would take them together in some say because there's also something called the multi cap theme. So wherein you got a mix of large cap, mid cap, and the small cap. So here the returns could vary. So depending upon, because naturally when you look at small caps, it's more of a major upside, but at the same time a downside is also there. So in that case, what happens is that the returns could vary anywhere between, I would say 15, 18% could go up to as high as 28, 30% as well, depending upon the period one holds. So that would be the sort of returns. Ideally, one is looking at investing in mid cap, small caps, or multi I would say different caps, or a multi cap fund from an equities perspective.
Thank you so much for being on the show and helping our viewers with all the details on this fund category. On that note, we'll take a quick break. Post that, let's get your portfolio queries answered by Aditya Shah.